What's up everybody? My name is Ryan, I'm a CPA, and today I'm going to be going over some PPP frequently asked questions. But first I want to ask you to please subscribe to my channel if you haven't already to stay up to date with everything PPP, EIDL, SBA, all that crap. And also please smash that like button to let the YouTube algorithms do its thing. Also, please leave me a comment below on how you're doing, how your city is doing with the coronavirus, with the protests. Has there been a second spike in your city? Just let me know what's going on. I'd love to hear it. And also let me know what you think about what's going on with the SBA and if you have any questions for me. All right, so I'm gonna go over some questions that I'm getting a lot, and hopefully it should help clear the air for some of you. The first question I've got, and I think it's important to address this, is that there's another video out there that says that, in order to calculate the PPP forgiveness amount, you have to divide your payroll costs by 60%. And then, people are all confused about this because that obviously doesn't make sense. Like, why would you divide by 60 when you should be multiplying by 60? And I'll just tell you that it's not incorrect. It's on the application. It's just not the final way to calculate forgiveness, right? So let's say calculating forgiveness is a 4-part process. The dividing by 60 is part 3 out of 4, and I'll show you what I mean. So here I have the PPP forgiveness application. It's actually a calculator on an Excel spreadsheet, and you see on line 8, it's the modified total, which basically sums up all your payroll costs and your utilities and your rent and your lease payments, and then it also reduces your payroll costs if necessary by the FTE reduction. So that is an example of a modified total, okay? And then line 9, you'll see the PPP loan amount. In this case, we have $150,000 for the loan amount. And then on line 10, here's where you see that calculation. And I know this is just the spreadsheet, but this is what will actually be on the application. And on the application right now, it has the 75% because that's the old rules, obviously. But in this case, you see here, divide line 1 by 0.6. Now line 1 is payroll costs, and that's brought in from the Schedule A. So you divide by 0.6, it's 194,000 in this case. All this entire section is step 3 out of 4. So step 4 out of 4 is you choose the smallest of those 3 numbers, okay? So in this example, the smallest would be the $141,384. So it's just making sure, it's part of the calculation. You pick the smallest of the 3 numbers to make sure you don't get more than your loan amount forgiven. As you can see, your loan amount, $150,000. That is the limit of how much you can get forgiven. Obviously, if you pay less payroll, or if you had some FTE reductions, or you didn't use your entire loan amount, then obviously you're gonna have less than that forgiven. I know someone pointed out that another accountant's video said that if you divide by 0.6, then that's your forgiveness amount. And I believe that is a half truth. Like, it's halfway there. It's not the final way you calculate forgiveness. So I hope that clears that up. The next question I've been getting kind of frequently is, if I do fall below the 60% payroll threshold, why does my loan just become not forgivable? And I'm just going to tell you that in the bill, the way that the bill is written, that's how it is. If you don't meet 60% of payroll costs, then nothing is forgivable. And that's a huge change from the old rules, where if you don't meet the 75% payroll costs, then at least you still have some forgivable loans. But the way that the bill is written, that's not the case anymore. Now, I know that some key senators have said that that was not the intent at all, and they are planning on amending the wording of the bill. And usually how that happens is they issue another bill. So you're gonna have probably a bill to fix a bill that fixes the CARES Act. So just stay tuned for that. I honestly don't think anybody's gonna have any trouble reaching that 60% threshold. But either way, the senators are intending to change that. The next question I get a lot is, are forgiven PPP loan expenses tax deductible? And the answer is still no, it's not, unfortunately. What this means is, if you got the PPP and you used it to cover your payroll costs, and then you got your PPP forgiven by the SBA, then those payroll costs are technically not deductible on your tax return. And that's an old tax ruling, and the Senate is working on changing that at the moment. They introduced a bill called the Safeguarding Small Business Act that's supposed to make technical corrections to the CARES Act to exclude this IRS rule for the PPP loan specifically. That is Bill S3596, Safeguarding for Small Business Act. Look it up. There's not much going on right there at the moment. It's only being introduced by the House. There's been no movement, but it's at least in the radar. Next question, how does the EIDL grant affect the PPP loan? So if you got the PPP and the EIDL grant, the EIDL grant is supposed to reduce the forgivable amount of the PPP. Now I know it's not calculated in the actual application calculation, but they do ask for whether or not you receive the EIDL grant. And I think that might be something that they do on the back end rather than having the applicant calculate it in the calculation. Next question is a big one, and that is, how does the FTE calculation work, or the full-time equivalency? People are asking me whether or not it's an average or if it's an absolute where you get your number of employees back to where it was, then you're good, or is it an average over the covered period? My answer for that is that it's both. You take both things into consideration. So you do take the average of your covered period, your average FTE throughout your entire covered period, and you compare it to a reference period of your choice. Now the reference period can be either the periods of February 15th, 2019 to June 30th, 2019, or January 1st, 2020 to February 29th, 2020. This reference period is just like a baseline. It's a benchmark for you to compare your FTE calculation to. So let's say you chose the period of January through February of 2020. How many employees did you have over that period of time? If you had 5 full-time equivalent employees, that means that you need to reach an average of 5 full-time equivalent employees through your covered period. But I also did mention an absolute amount. If you get those 5 employees by a certain time, then you don't have to worry about averages and stuff. And that's called the safe harbor. Okay, and I'll read to you right now what the safe harbor rules say. So the safe harbor rule applies when both of these conditions are met. 1. The borrower reduced its FTE employee levels in the period beginning February 15th, 2020 and ending April 26th, 2020. That means during that time, you had to lay off employees or furlough them or whatever it is. Okay, second condition. The borrower then restored its FTE employee levels by not later than June 30th, 2020. By the way, now it's December 31st, 2020. I'm just reading the old application. By not later than December 31st, 2020 to its FTE employee levels in the borrower's pay period that included February 15th, 2020. So what that means is, first, in order to qualify, you had to have reduced your staff between February 15th and April 26th. Okay, I mean, most people probably did that. And then second, you take the amount of employees that you had on your payroll period that included February 15th, 2020. You take the number of employees you had, and if you're able to reach that number of employees again by the end of the year, by December 31st, 2020, then you can elect the safe harbor method, and you don't have to worry about averaging through the covered period. This is your absolute, yes, I met the number of employees, I'm good, I don't have any reduction in payroll forgiveness. I hope that clears things up for y'all. And the fact that there's 2 methods makes it a little more confusing, and just breaking it down that you can do either one method or the other method. And the last thing I want to cover today is the covered period, 8 weeks or 24 weeks. People have been asking me, are my FTE averages calculated over an 8-week period, even though the rules just changed to have a 24-week covered period? Is there like an 8-week period that you can choose within that 24-week period? And the answer is no. It's just your averages are based off of your entire covered period. So if you elect to have an 8-week covered period, that's what your averages are based on. If you elect to have a 24-week covered period, then that's what your averages are based on. And that's all there is to it. There's no in between. There's no choosing a section of your 24-week period. You elect either 8 weeks or 24 weeks, and you have to take the average of the entire covered period. Everything that you do is reflected in the entire covered period. That's all I got for today. Thank you for joining me, and I hope you all have a great rest of your day. Please smash that like button and subscribe to my channel if you like what I'm putting out. And stay safe out there. I'll see you next time.